please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find the recordings for this event. And before we get started, we have to share a quick disclaimer. You know it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. You have to do your own research, and you should always verify and research. Toni Hansen from Trading from Main Street. She's going to talk to us about understanding price action at its purest. And I know she's going to go ahead and tell us about herself, but I want to share with you what I was given. Toni is one of the most respected technical analysts and traders in the industry, with a high reputation for accuracy in both bull and bear markets. She began her trading career as an equity swing trader in the mid-1990s, and she has since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and Forex. Now, that's a pretty broad range of expertise. So welcome, Toni. I really appreciate you being with us.
Oh, thank you for having me. Do you all hear me all right?
I can hear you. Can I ask you a quick question?
Yeah, sure. Go ahead.
We didn't connect yesterday, and I was really looking forward to it because Dan told me, you need to get with Toni. She's got a great story. So how did you get into trading?
Well, a guy I was dating at the time, actually, he was interested in the grain markets up in Minneapolis, and I had no knowledge of the markets whatsoever. And I just started helping him, get his stuff set up, and well, I'm still here. He's not.
Oh, so
Out as
also
just
let me just
yeah,
ask
go
you
ahead.
real quick too.
Yeah.
If you weren't a trader, what would you be?
I'm sorry, what was that?
If you weren't an expert professional trader, what would you be?
I actually worked for the Office of the State Archaeologist as an archaeologist
Wow.
before I got into finance. Yeah.
Oh, neat.
Big
All right.
about
Well, I just
face
had
there.
to know.
Well, thank you all for having me. As you mentioned, we're going to talk about trading pure price action. What do you guys think about when you hear that? When you hear trading pure price action, what comes to mind? You're seeing so many things out there as far as systems and styles of trading and markets, right? No indicators, exactly. So when I'm looking at pure price action, I really mean pure price action. And when I started trading, you guys, there wasn't much out there as far as education goes, especially for online trading, because I started trading in the mid 1990s. And at that time, there were still a ton of floor traders. We hadn't really transitioned to online trading. The market was just kind of just starting to make that transition. So technical analysis at the time was really viewed as voodoo. It wasn't something that a lot of traders did. They focused more upon news aspects and things like that. And so I come in from a background in the arts. I was trained as an artist from a very young age. And going into archaeology, I was looking at a lot of things like how humans behave and how we react to different stimuli, what our reactions are. And so for me, when I'm looking at the charts, all I'm seeing is basically a visual representation of human emotion. And that is something that it transcends pretty much everything. If we even looked at the COVID infection rates, I have a free session I would do every Friday. Well, I still do it, where we look at the overall markets and look at what the broader view of things are. And what I would do on Fridays is I would go and we would look at COVID infection rates as well. And you could see the same patterns on those that we could see on our charts, because really we're just looking at human emotions. So let me go ahead and show you the things that I look at as I developed a system for trading. And what I did was, as we were looking at things like um, our bull flags or bear flags, or some of those key technical terms that you're probably very, very familiar with, but kind of are still pretty vague, because if you're looking at something as like a bull flag, well, really all you're looking at is a pullback in an uptrend, right? So you've got your series of higher highs and higher lows, and you're looking at that as an uptrend. And so really any correction could technically be called a bull flag as long as the trend continues. But what makes it buyable? How do you know that something is going to take off here versus having another correction and continuing? And what's the probability on a setup that corrects a little bit longer versus one that goes more quickly? So when I got into analyzing the markets, what I did was I took those very vague setups like a bull flag, where you're basically just looking at a correction 3 to 5 bars or sometimes more in an uptrend and looking for continuation. And what is actually going on in that correction? What clues are happening within the correction itself that are going to tell me that, hey, this is a correction in a bull market where we are going to be buying it. We do want to look for a continuation versus something that is showing exhaustion, where there's a higher probability that that trend is going to end. And so when I look at pure price action, I'm just looking purely at the charts themselves. You'll see things like volume on there, which I use as a secondary confirmation. So for example, if we're looking at a bull flag, we would like to see the volume declining in that correction, because it's showing us that even though the market is making lower lows, that there's no real panic involved, and it has a better chance of being able to recover from that move. But volume is just a secondary indicator for me. And when we look at the pure price action, what we're looking at are, let me clear this here and move to the next slide. We're going to be looking at these 4 building blocks. I call them the building blocks of price development. So they are trend placement, and there's 2 types that we'll look at. The first one here is a very simple representation of a core trend. When I'm looking at trends, what I'm doing is I'm counting primarily in waves of 2 or 3, or sets of 2 and 3. And so if I'm looking at this downtrend, for example, we've got a nice 2-wave move here to start off the trend, and we've got a nice 2-wave correction, another 2-wave continuation, another 2-wave correction, and then another continuation, a little bit of a pause in here too. And so what I'm looking at here is, okay, now we've got a 3-wave trend with 2 waves of correction. And so if this tries to go again and break for a 4th move, the probability of success of that as a continuation is very low, because this is actually going to tie into our second building block, which is, well, our third one rather, which is time development. When we think of these trends, we're going to come back to this chart. Look at the time that it takes for each of these corrective moves to form. So if I'm looking at wave counting, I'm going to primarily be looking at 2 sets within a bigger trend where we can have 3 larger moves, but I'm primarily thinking of 2. And so within this trend move here, where we've got those 3 waves down, where the corrections are lasting that same amount of time, this has a very low probability of offering a continuation. Usually if it's going to try again, it's going to double out in terms of that time development, and that's where you would get a chance to try again. However, if you have 2 corrections in a row that are the same size, and you then get the 3 waves of trend development, and then you get 2 waves of correction that are again the same size as each of these, that tries to continue, that's usually the end of the trend. So you'll get a final move and then a break of that bigger trend. And so that's a really nice buyable position there. In this case, it didn't make it, all the way to a new low, but in some cases it does. And that's usually the end of that full trend there. Now, when I say I think primarily in sets of 2 though, that is because when we look at these 2 corrections here that happen within that 3-wave trend, other ways that we might see that form could look like this. So it can be the same height, so the same amount of price that the development that happens, but these 2 waves of correction can happen midway instead. And so when we're looking at, hey, how do I know if this is going to be 2 waves or if this is going to be 3 waves? Well, that's where the other building blocks come into play. They all work together. One of them is not something you use by itself. So when we're looking at our trend development, we need to look not only at wave counts, but we also need to look at momentum, trend or time development, and support and resistance levels. So as I go through this presentation, I'm going to touch upon each of those and show you how they interlock and how they work together. So another way we could also see this form too is that we could get a bigger move here, that correction, shorter the correction, and then the continuation. So your midway zone could be tilted as well. So this becomes our main primary wave, and this becomes our main secondary wave. So this one here in the middle, this could be shorter, it could be longer. So sometimes this could be a short zone and a bigger middle zone, and then a short zone. But in each of these, you'll notice that the time correction is about the same. So that's a key when we're thinking about wave counting, is that time development as well. So we will work with these and kind of put them together and show you how they work with together here. So here's an example from this week. And this is a trend that I was trading, but I was looking at going into the day. And what you'll notice here is that we have that same sequence really playing out on multiple waves within this 15-second time frame. So we see it on the corrections where each of the yellow zones takes about that same amount of time. So we've got our 3 waves in there. You can see it in here as well. And you'll notice a lot of times in those smaller continuations, you'll get waves of 2 instead of waves of 3. So 2 and 3 are what we're really focusing upon. But if you look at the one here and the one here, and then we look at the smaller ones, notice that the smaller ones, if we added those together, they're the same time development as is taking place in the bigger corrections. So this one plus this one is equaling this one. And that is a relationship that you're going to see play out over and over again. So this one here, if we took that and doubled it out, then that's another time zone for correction that we could also look at. And it continues like that. We continue to see that kind of doubling out in terms of the correction times and how long those can take. But if I see these 2 corrections in a row they're lasting that same amount of time, then that is telling me that I have a higher probability that that next wave coming out of that is more likely to be an exhaustive move, that I'm going to start looking for reversal patterns. And up here, you'll notice that each of the waves becomes more and more stunted. That is also a really good sign of trend exhaustion when you're seeing that stunting take place. So the other type of trend placement has to do with what we call impulse waves. And an impulse wave is this primary directional move in the market. And it is one where, again, it you'll have the larger moves and then you'll have the smaller ones. So what I'm looking at when I'm comparing impulse moves are the ones that have that same pace of change, that same rate of change happening. And when I get to levels where I'm seeing a lot of them that are about the same size, that's telling me that I need to be really cautious on looking at the move as a continuation, because a continuation move where I've already seen an impulse move that has that same size is going to have a more difficult time. So that can be the difference between where I'm looking for 2 waves versus if I'm looking for 3 waves. So if I have an impulse move, for example, that looks like this, and this is the primary move, and then I've got another one that's coming in and it's formed like this so far. Well, the momentum or the pace of that move is the same, but this one is stunted compared to the first one. So that can give me a better idea that this has a greater potential for third move down versus just doing the 2 waves and then ending with the 2 waves. Because the momentum is the same, but this one has only gone about 2/3, I have a better chance that it can offer another continuation and I can get a third leg in instead of just a 2-wave move. Also, another thing to keep in mind too is if the momentum is picking up, so like we have here and here compared to over here, the momentum or the pace is changing so that we're getting that greater strength coming in, then I also know that I have a better chance that it is more likely to push to a larger move. So then I'll start looking at, okay, well, what are some larger impulse moves? And that is often combining some of the smaller ones together to give me the larger one. And that will tell me, hey, you know what? That is a zone that I also need to be looking for. And a lot of times you'll hear people talk about things like measured moves, and that's where that concept comes into play. When we get a continuation where the momentum is the same, then we have a very high probability that we're going to get a really comparable continuation. And we need to start looking for target levels once we get to those zones where we're seeing that similar exhaustion coming into play. So both in terms of the momentum and the size of the move itself, how large that move is. So here you can see that there's 3 waves in it. So it comes in and it completes a second wave, but the momentum is still very strong. And over here we had the 3 waves as well. So there's a better chance then that this is going to go and do that third wave as well. Clear this. So here's another example. This is just Dexcom from a previous presentation I did on the same topic, but it shows you the same idea and the same concept here, where we have, again, these same size impulse moves. So as this is forming the continuation, that's telling me, hey, you know what? This is a decent level of resistance to watch for. And this is where I would usually look to be placing a target level. If the momentum had picked up, I would be looking for more. If it had slowed down, I would be looking for less. But this is that main zone that I would look for. Here, we have the main move down, our correction. In this case, it's a megaphone, and then it breaks again. Again, same momentum as we see over here. So support levels are going to be about the same. We're going to be looking for about that same zone of support. So if I see something that looks like it's forming a bear flag on a smaller time frame, I'm going to be very hesitant to trade that because the probability is less that I'm going to have a strong continuation on that bear flag. Here, where we get that bull flag, I would also tend to be more hesitant. Even though this actually went to a higher high, it could have something to do with, the bigger trend in here, but I would still be more cautious because in this larger trend, we had this larger kind of correction in here. So I would know that if I took this on a smaller time frame, if it didn't get going right away and it just continued to base out, I would be looking back at these previous zones of correction and how long those took, because that's how long it could take again before it would be able to offer continuation. So I would have a better chance of getting stuck in something like that. In this case, it worked, but the risk is higher that it would not based upon our impulse move. So here's that second building block. And we talked about this a lot in terms of the first building block, because again, they're all working together. So one of the things that I like to do is draw an example of how momentum can play out. So when we have these strong impulse moves and you've got a more gradual correction where it's more of a time correction than a price correction, then we have a higher probability that we're going to see a stronger continuation move. Now, if we start to see that momentum begin to shift, because now we've already got two main legs of upside, and here it's trying to do that third move, but the momentum is shifting, this starts to become a zone where I begin to watch for reversal patterns. If this range is really narrow here as it's going to that higher high, oftentimes what we'll see is we'll get a breakdown where the momentum will start to pick up. We'll get a flush, and then we'll get a larger reversal again, where the momentum can again turn around and give us those nice impulse moves. If this is a wider move to the high, it's easier to just hold that high and continue at that point. So if we see this foot here beginning to develop where our overall channel is now shifting, this becomes a zone where I start to look for reversal patterns instead of those continuation patterns because my overall momentum is beginning to shift. So once I have those two main impulse moves, I need to watch when it tries to do a third one. So if I'm expecting it to try to do a third one, but it's having a harder time getting going, then I need to be more cautious and look for the reversal patterns to start to form. So the first continuation is the one that I know has the highest probability. And to determine if it's going to be able to do a nice third move up, or if it's more likely to do that stunted action, I need to take a look at this entire move here and then to here and look at previous bigger impulse moves. Are most of the previous impulse moves tending to get stuck at this size, or are most of them tending to get stuck up here? Because if most of them are getting stuck up here, then my probability of getting a stronger continuation is going to be better. I'm going to be more likely to get that third move. But if most of them are getting stuck at a price of this, let's say this is 50 and this is 75 points. So if most of them are running for about 50 points and then going into a longer correction, then I know that even though this might be giving me a buy setup here, that buy setup has greater risk of being stunted, and I need to be more aggressive with my trade management. So what I'm looking at then with that trend development is also how that momentum begins to play out. And when I first started teaching momentum, I called it pace. Nobody was teaching this, even though if you think about it, it seems like so simplistic, like duh, but people just weren't really focused upon it. One of the core kind of momentum strategies that you'll see happening are things like a head and shoulders pattern. So you'll get that momentum shifting as you're coming up into the highs. These usually are having two waves within each of these movements, but we're starting to see that overall momentum begin to shift. So ideally, as it's coming and developing your right shoulder over here, you'll be transitioning from the stronger upside moves to a weaker upside move. And that's going to help create that stronger reversal. And that can also be the case when you have an inverse cup with handle as well. And determining where we want to short here, this is where we start to get all of those building blocks working together. Because as this is forming here, I want to see it have two waves, but I'm also looking at time development. So I'm looking at, hey, how long did it take for this left shoulder to form? So in a textbook scenario, that right shoulder is going to take that same amount of time. We would also have the time development between the highs. And I'm going to touch upon that in more detail here in a couple of minutes. But that's another thing that we would want to look at. So we're looking at the momentum shifting, where we're getting that rounding off and the change in the momentum here, but we're not neglecting those other building blocks. So we also want to keep in mind that trend development or trend placement, as well as our time development, our support and resistance, and both of those types of trend development with the impulse waves. So here's a trade that I took earlier this month. This is one that we were talking about in the live classes that I teach. And this is the shifting momentum that we were looking at. So what you're seeing here is that we're starting to get a change in the momentum on that bigger scale, where it had a stronger two-wave correction here, but in here, that two-wave correction is kind of shifting. So it starts kind of does close to a double bottom, retests that bottom again, but has broken through the upper zone of the channel, and then starts to change that momentum again even further right here on a smaller scale. We just call this a check mark. And you'll notice even within this, you got that stronger upside move, and then we get the weaker correction. So this correction is pretty fast to start with, but then it does that weaker correction here. On a bigger time frame, this whole congestion was the same size as a previous congestion zone. So it was serving as that measured time development too, to get the continuation going on the upside. Another thing in terms of the time development on here is that if we now look at this overall bigger trend here, see how we're testing the high here, here, and then you're coming up over here? Look at that spacing. So when you're going from that transition to the uptrend, the downtrend, and then trying to break high again, if we're looking at a bull flag, this zone here and here, if those are about the same when you're getting that breakout, that has a very high probability for a buy setup. If it tried to break too early right here, or if it tried to break higher over here, and you don't have that A equals B relationship, your breakout is going to be higher risk, more of a chance that it's a trap. So we're looking at the wave counting, but then we're also looking at where it tries to break out. This is too early. So even though that ends up serving as the low here, if it had tried to push through that high right here instead, it is too soon. So that tells me, hey, if I buy a setup down in here and I'm looking for that to continue, I need to anticipate that there's a chance that that would go into another correction before it continued. And so I would need to be prepared for that. So that time development aspect on this is telling me that, hey, you know what? Even though I've got the two-wave correction and I've got my retest of the lows here, this and even this could be a higher risk zone to buy it because that momentum could still shift and end up breaking lower on me. But if I'm buying a setup over here where I'm at that time extension, I have a higher probability that that is going to work in my favor. And I was just throwing these charts up as I was trading, so they're not the most beautiful, but you can see where I was looking at the measured move. These are those measured impulse moves. And I use that to take profits on the trade. So we get that two-wave correction in here in the middle, and then the profits. And this actually had some really good continuations later on as well. Clear this. So here is another look at the continuation. So we can see beautiful two-wave corrections, nice little shifts in momentum. Here's that breakout. And over here, we have another one of the continuations. And I'm showing you this again because we also have that momentum shifting coming into play. So this correction is a little bit faster overall than the correction here. And it's taking about twice the time development to form. So we get that doubling out in terms of the time development. And what we had here is that as this came in, we even get, here's our 3 full waves here, we even get that smaller change in momentum taking place down here. And we call this a foot. And we love it when that foot is breaking that channel, even as it's going to slightly lower lows there. That's telling me that the trend is starting to end. So here you've got those 2 corrections that are taking about that same amount of time. And then it tries to go for that same amount of time again. It puts in a slightly lower low, but it can't really break to a very strong low. So here is that first correction. It's as a check mark. A second correction is a bit more of a megaphone. And then it tries to correct for a third time, but it can't get going again. So that's where that time development of those corrections really comes into play. If they're about that same amount of time and it's trying to go again, that is not one that we would want to take as a bear flag because the risk is much higher that it's going to be stunted, that it's going to be a trap. But if we have this sequence of where it's putting in these slightly lower lows, then this is actually changing momentum within that congestion in there because we get these stronger pops and then the two-wave drop. Pop, two-wave drop. This becomes a buy zone. I missed it on this one, but what you'll see is that as it came up here, went into another correction again. Here it started as a megaphone and then it doubled out. Nice even spacing between the lows here. So if I look at the first high, the second high, and then where I wanted it to see it break, that timing there between A and B is about the same. Now, this one's a little bit trickier because it didn't have, your full two-wave correction, pop up, do a nice two-wave correction again, so that you would have your sets of 2. But it did the same type of equivalent here. So the timing was still the same for me. And what you'll notice too is the volume. Look at how light that volume is. So even though this is pulling back in here, there's no real selling going on. So this is also telling me, hey, you know what? That's a good buy zone. And you can actually see my execution here on the chart as well. And that was right in here. So I'm looking at, again, the momentum. I have very nice, strong momentum. This was coming out of that larger trading range. And the correction, the pullback was slower in momentum as well. We even had a bit of that head and shoulders here going on, an inverse head and shoulders going on with that continuation here too. Here's an example. This is from Friday. We were looking at, okay, so what's going to happen in the loonie, our US Canadian dollar pair? And what we were looking at was the fact that, hey, we have this trying to change and shift momentum. But what we didn't have yet was any confirmation of the momentum shift within this congestion here. So as this is developing here and kind of pulling out further, this momentum was not really strong enough to tell me that I was going to have a really solid probability of a breakout to the upside. There would be more of a chance that it would be a trap because the downside momentum here is still really strong. And then when we compare that and transect the upside, that upside momentum is still pretty slow. So what I wanted to see here is that to get a higher probability setup, if it would either shift momentum here to give me a short, where I then go and see that momentum changing like that along this 76.4% fib band, that would give you a short for a breakdown. You would have a lot of support over here, but that would be a short setup. I wouldn't love it as much as a long setup when the momentum is so strong over here. But when you have a really extreme momentum move, it can be more difficult to get a really extreme continuation. There's a higher probability that the more extreme impulse waves, it either needs to go really quickly, where this is just more of like a kneecap type of zone. So like you're seeing on the way up, each of these little corrections on the way up, or when it tries to continue, you need to be prepared that that continuation can be choppier like that. In this case, it goes with the same momentum, but a little bit shorter. It can't quite make it to that full size because it ended up basing out a little bit longer than just that 1-to-1 ratio. So if this had gone right here, that would have a better chance of putting in that full 100% measured move extension. So our time development is also going to impact what our odds are for getting a nice continuation with an impulse move, another strong impulse move. And if you look up here, you'll notice we've got a time correction and then you've got a price correction. This combination, time and then price, that makes this upside move less predictable. On the other hand, if you had price and then time, you have a higher probability of getting a stronger impulse move. So when we look at the momentum, this particular momentum shift here is telling us that, hey, this is a good zone to look for reversal strategies, because this move tried to do a continuation, but it was stunted. And then when it tried again, that momentum was even more stunted. And it had the time correction, then the price correction versus price and then time. So if this does price correction and then time correction, there's a better chance of getting a stronger move there. And the same way on the upside. So if this does our price correction here and then does a time correction here, then that would have had a better chance of doing a stronger move on the upside there. So this is an old chart, but it shows you what we would be looking at as it's coming into a support zone. So what changes in momentum would we want to see in there? And if it's something like an inverse head and shoulders as well, well, as that's coming up, let's draw out what an inverse head and shoulders would look like. Then when we're looking at our timing between our highs, what we would do is we would split those two highs. So this becomes A and that becomes B. So that would be where you would be looking at for your higher probability for your breakout zones and something like that. Let me clear this. And we're going to go and look at our time development here. So we talked about that time development already, but I want to show you some charts here that really put this into play and then show you from this week to how it helped with the live analysis that I was doing this week. So here we had a new trend that was starting. 2 waves up, 2 waves of correction, and look at this momentum shift in here. So that momentum shift allowed that second wave of correction to go and gain momentum, but overall the volume stayed really light. So that still remains as a nice correction within this uptrend, because when we've got a megaphone forming, you're doing a time correction. So a megaphone where you get slightly higher highs and then you get the lower lows is just a type of time correction. Second wave up, another megaphone. And here we can see the shift right here. So at this point, we're a little bit too early compared to that previous zone of congestion. So it allows it to do that kind of extra little pause here where we get a little phoenix before it really continues. You'll see again, it does about that same amount of correction. So you're trying to correct around that same zone here. But even though your spacing looks great between the highs here and here, it's already had 2 corrections that are taking that same amount of time. So the probability of that being able to have another move is very, very slim, you guys. You're just not going to see that continuation work as well. If it doubled out like to here and tried again, it could put in a 4th move, but that would tend to be the end of the trend. So if this is pulling in or it's staying slow, but still holding up with here and had light volume, I would still look for this as a chance to try another move up. But that would be the end. And then I would expect that sequence of higher highs and higher lows to break at that point. So here's just another example. Same thing. So same amount of correction here, but it's not able to offer a continuation. And this is another thing that we watch. When you get something that is more of a time correction and then another one that's a time correction, your next correction has a very strong probability that it's going to be a price correction. So once you get your 2 waves of upside or your measured impulse moves, looking at previous momentum, then I'm going to expect that it has a higher probability it's going to do more of a price correction at that point. So here's the same thing. This is that chart we were looking at earlier. So you can see it with those time development zones and how measured they are. And then here is another type. We're looking at this idea in here. So we've got that 2 moves. This should still be type 1. Sorry about that. But we're looking at those waves of 2. And that's comparable time development when we're going between those lows. And so this is triggering this reversal. This is actually a setup that I was long and I got out as it was forming the high up here, because what we had was the trend exhaustion on the larger time frame. So this was putting in the 2 waves of correction right in here. And then as it was doing the 2 waves of continuation, that momentum started to shift. So we had a larger time trend exhaustion over here. This was a bigger impulse move. And so this was creating a reversal pattern on here. And I didn't trade the reversal, I just called it in my platform, because we were looking at this as the end of that trend, but it also could have been traded as a reversal. My problem with it was just that it was the end of the trading day. So we were going into the close. You were going to have the market on close coming up at 1550, and then the close of the session as well. And so here is that other type that we kind of saw it a little bit on that previous one, where what I'm looking at are distances between highs and lows. So if we see things going into like more of these V's back and forth, if I have that comparable distance between the lows, then I have a better probability that I'm going to get a stronger buy setup. If I've got that comparable distance between the highs, I have a higher probability that this is going to be a good zone to start to look for shorts. So as reversal patterns. And then another way that we can look at measuring distances between highs and lows, here's another right here, is to also look at things like when we get the rounding off, like where we get a head and shoulders. So if your shoulder is evenly spaced on each side of the head, then that is going to be, whoops, that should be a shoulder there. That's going to be a higher probability zone for continuation, you guys. It's going to be more likely to continue at that spot. So these are just, really simple ideas, but they all work together to create these really strong patterns to serve as those reversals. Let me clear this here. So the fourth one is just really simple support and resistance. So if I look at, for example, we'll pull up our chart here of the Dow. Let me grab this. I need to change my marker. There we go. So here's our micro Dow chart. So if we're looking at support and resistance levels, some of the things that we want to look at are, I'm actually going to back this up a little bit more. So the major support and resistance levels, things like previous highs and previous lows, those are really simple ones. So if you've got a high, it's going to become support once it breaks, and vice versa as well. I also look at these impulse moves here, and I look at the retracement on the impulse move. So when you're halfway back, that is a major support zone. We call that usually a kneecap. Where that channel breaks to trigger that upside move is another support level. So whenever you have a channel that's forming, it breaks that channel and it comes back down. That break zone there, yellow is not the best color here, but that break zone is going to be where we have a higher probability of seeing a support. So if this is our 2-wave move on the upside, this is our kneecap. That's the first level we watch for. This is that break zone. And then if this is like a slightly higher high, we can also widen this up and flip our channel, and that becomes a support zone as well. So those are some of the key support levels that I would look for on a reversal, like what you have coming off of that high up here. And when you're determining, hey, can it make it to this level, or this level, or even further, you want to watch that momentum, because if the momentum pulls in really solidly into this congestion zone, then the probability is very high that it's going to make it to this level at least. And if it pulls to the lower end of that zone before it pauses, then you have a much higher probability it's going to come all the way back down to here. So if we look at this correction, look at where it got stuck in this congestion. It slowed at that upper end. So that means that it has a harder time. It's going to continue to have a harder time on that continuation. So when this pulled back in here, you would want to be more aggressive at taking gains off, just because it stalled at that upper end first. So the probability of it doing a nice continuation is going to be a lot lower. So you would want to do a lot of smaller trade management on something like that. Whereas if it went and it had a really solid move into here without pausing, and then did the pause at the lower end, then you would have a better chance of getting a nice strong continuation and not all of this chopping that we're seeing happening instead. So that is something that we like to really look for when we're looking at those impulse moves and a reversal coming back into it. An example actually is the short that I had earlier today. And let me see if I can have that chart up. I might have to exit this. But there was a beautiful example here of that same pattern. It was just in the ES, and the NASDAQ kind of did it, but the ES is the one that really triggered it well. It's gold. Oh, there it was, ES here. So this is what I was looking at here. And I didn't end up holding this one for the larger continuation because we were getting prepared for class here. I was getting prepared for class, but this is a reversal that I traded here just this morning. And what you'll see on it is that as it was coming up here, we had the bigger trend exhaustion, and the channel here was starting to shift. So here's my 2 waves up. This is my midway zone that I was watching. And you'll notice that it pulled down pretty well into that midway zone. So that gives us a better probability that it's going to try to not only make that zone, but be able to break down even further and come down into here. So this is one where I took all of it off here as we were coming in, going into our class. But if I didn't have class, I would have only taken partials and looked to continue to hold the rest of it, or gotten back in on the continuation. So I shorted it up in here, added into it with the momentum shift. We had that measured impulse move, we had the bigger trend exhaustion, and the momentum was starting to shift on that larger time frame. So all of the indices were creating reversal patterns there. The NASDAQ had the hardest time getting started. It did flush eventually, but it had a harder time really getting going coming off of that because it had greater relative strength So the momentum on the downside had a lot to do with that momentum on the upside. So here's another example. This is from, I believe it was yesterday, another trade. We were talking about this intraday where we were getting trend exhaustion, and it was having a harder time, really being able to offer up any good upside moves. So looking at the time development here, we had the zone where this would be the inverse head and shoulders. So if this was going to try to continue to do a second wave up, this is where it would have happened. But this was overall part of a momentum change where we were seeing slower momentum on overall upside moves. So when that offered that failure there, and it couldn't confirm, where if it was going to confirm, it needed to do it right here, because this is where you've got that momentum shifting to offer that inverse head and shoulders. What we were looking at though was the larger time frames were more bearish. So they were creating a larger sell pattern. So what I wanted was, hey, this needs to create that trap, flush those people out, came up into that resistance zone where the channel breaks right there, and then offered that confirmation on that downside move there. And here, again, you're looking at measured impulse moves. So this was a little bit slower, and there were other things happening on the NASDAQ as well, and I used that to exit, and it ended up being the entire low, because this was a measured impulse move compared to what we were seeing in the past. And we also had exhaustion on the other indices at that same time. So it's really just everything kind of coming together. Volume was pretty light throughout this as well. Here it did 3 waves on the continuation instead of 2, each wave gaining momentum, which means that with the second wave gaining momentum, there's a higher probability that third wave can gain even more momentum, because we were not near the exhaustion of that bigger impulse move yet. So it still had more room that it could play. And here's, this one was yesterday afternoon. And what we were looking at again was our time development showing our exhaustion moves. So here we had 3 moves up, we had a bigger correction, broke that channel, then did the 3 waves up here again, very comparable time corrections, and then that shift. And that created a reversal pattern here. And I took this on the Dow as well. So this just shows you the micro of the NASDAQ. I took it in both of those markets. The Dow ended up doing a lot better. But when we're looking at support and resistance levels, when you get a retracement into a zone where you have a 2-wave correction, I usually aim for the furthest one. So whichever one is lower. So if this had a 2-wave correction where, let's say this came up here and held this high and then went up, I would have aimed for this one as the target. So I don't usually aim for that full previous high, but a lot of traders do. And if they're trying to do it as a reversal, they're getting trapped because of that. So this was yesterday afternoon, and this is what I was looking at as the 3 waves in here, and this as the support zone. And on the larger time frame, there was spacing here for inverse head and shoulders that was happening. So we had the development of this as a bigger correction. The other indices, again, were able to flush a little bit better. And yeah, so this just kind of shows you how they're all working together. This creates the full 2 waves up, get a little bit of a bigger correction here. So if this was going to try to continue up, this is where that time development would have been about the same right there to try to offer continuation. So this is actually confirming that failure and that flush right there. All right, you guys. Well, I want to thank you all for joining me here. I know there was a lot to go through and take in, and they seem like pretty simple ideas and concepts, but when they're all coming together and you're working them together, then that is where we're getting that stronger confirmation of a setup. So as opposed to something that's going to be higher risk, when you have all of those building blocks leading to things that are happening at the same time, then you're much more likely to have a high probability setup. So I have a class and I keep my prices very reasonable for everybody because I do not make money off of my website, you guys. It makes barely enough to pay my staff, and that is it. What I like to do is pass on the knowledge that I've learned over the years and try to help you guys do the same thing that I was able to do in a shorter period of time, cut off a lot of that learning time that it takes. I come from a family of teachers. So my mom is a teacher. She was taught higher level math. My dad was computer engineering. And so I like to pass on that knowledge, and I created a class that teaches you one of my core setups that I trade. And this is one you're going to find basically every day. And it'll give you the template for trading it. It shows you all of the building blocks on the strategy, many, many details, as well as discusses how to overcome emotional trading obstacles, because frankly, that is one of the big reasons that traders get stuck. They get stuck because of the emotional aspects. So when you have a strategy that you know has been proven over and over and over again, this is one that I teach a class every day at noon. It's called League of Traders. And every day at noon, we look at the markets as they're unfolding. So they've seen the strategies unfolding in real time. We go through all of those building blocks, all of those pros and cons, and how they work together to give you these do or die points with very specific targets, very specific stops, as well as trade management. So if it doesn't hit a certain target level by a certain period of time, you're adjusting your stop and doing your management a little bit differently than you would if it did hit the target levels. So what that does is it keeps the stops very small compared to what your potential is, because your stop is evolving with the trade. And you know that, hey, this has to happen in this period of time, or it's more likely to stop out. So why would I hold it for my original stop if the odds are now higher that it's going to hit? Well, you wouldn't. So it teaches you how to make those adjustments and protect those gains, but in a very logical manner. What time frame do I trade off of? I trade off of mostly the intraday charts these days because I am in Arizona now. When I was on the East Coast, I did more swing trading, more of the opening plays. I did a lot more Forex when I was over on the East Coast. So the markets that I've traded have changed over the years, just depending upon what's going on in my life. So I used to trade almost primarily the opening gaps coming out of the open, using the same tools, the same types of technical analysis, but just trading it out of the open instead in individual stocks. And it's just changed over time. So now most of my trading is happening midday, and I'm looking at the smaller intraday timeframes, usually on the NASDAQ. A 2000 tick chart is my primary time frame, and then I drop down to look for smaller time frame setups. The building blocks again are trends development, momentum, time development, support and resistance, and then volume is one we kind of talked about a little bit, but not as much detail. So thank you all for having me here today, and I hope you learned a little bit along with this. The course again will take you through that in much, much more detail based upon a very specific setup, you guys. And again, it's one that once you learn that setup, you're going to learn the setups that come before it, as well as the ones that come as continuations. So focus on one strategy to start with, really build your confidence on that strategy, and then branch out from that point forward. All right, well, thank you all.
Toni, that was fantastic. Thank you so much.
You're
Guys, I
welcome.
put it in the chat, https://tonyhansen.com/build. And I'm pretty sure that that $100 is not even going to break the bank. And it's
That's
also
like
going
one
to be
trade in the
like
micros.
so
Yeah.
much value. So I really appreciate you coming in, Toni. And thank you for sharing with us how you got started too. And I hope you
Thanks
have a
again.
great rest of your day.
You too. Bye.
All right, bye now.